Today in crypto. The road to the adoption of blockchain and crypto in the marketing industry is a long and winding road. But make no mistake about it, transformation is well on its way and the road will soon turn to a highway. As someone who has been a creative director, agency owner/partner, strategic planner, chief marketing officer for fintech startups and an entrepreneur, I've seen the marketing industry from multiple vantage points. Store, explore, procure. Rich Feldman currently leads marketing for Finario, an enterprise capital planning SaaS provider. Prior, he was chief marketing officer at Prima Health Credit and was an agency owner/partner and chief strategy officer at Donaire CX, part of the MDC Partners, Nasdaq STGW network, where he led the CRM, analytics, digital media and other strategic areas of the business. Rich has lectured on strategy at the New York University Master's Program in Marketing, at Syracuse University and is an adjunct professor at Western Connecticut University, where he is an advisory board member of the Onsales School of Business. He is also the author of the book, Deconstructing Creative Strategy.Continue reading on Cointelegraph. Yahoo users will not be able to interact via mail with Google, Nasdaq Google, email, Gmail, users. If tomorrow's headlines sounded like this, the earth would come to a halt. This headline shall never see the light for all the right reasons. However, blockchain tech and its favorite son, decentralized finance, DeFi, are heading towards this rabbit hole. Siloed blockchains with no window for external communication are dominating the nascent space. Interconnectivity is elementary and synonymous with the primitive human quality of being social. From the days of the barter system, transfer and exchange have been the two core practices on which the world has been built. Jared Moore is the director of marketing at Siacoin, the omnichain solution for decentralized exchanges. Jared has extensive experience in the crypto space, especially with exchanges. Continue reading on Cointelegraph. Jacobi Asset Management, a London-based multi-asset investment platform, received approval from the Guernsey Financial Services Commission, GFSC, to launch a Bitcoin, BTC, exchange-traded funds, ETF. Speaking to Cointelegraph, Jacobi Asset Management CEO Jamie Khurshid said that the regulatory clarity helps corporations and institutions to get involved in Bitcoin investments safely without all the risks associated with the technology and counterparties. Continue reading on Cointelegraph. Welcome to the latest edition of Cointelegraph's Decentralized Finance, DeFi, newsletter. In a week where Rari Capital achieved the $1 billion TVL milestone, read on to discover why OlympusDAO is yielding four-figure sums on its most popular protocol. Celsius Network raises $400 million to expand institutional service. Rari Capital smashes $1 billion in TVL. North America's surging DeFi volume. Token performances. Continue reading on Cointelegraph. Bitcoin expert Max Keiser has said that the Bank of England, BOE, will scramble to buy Bitcoin before the digital asset trades at $1 million. His comments come after Bank of England's Deputy Governor for Financial Stability, John Cunliffe, warned that cryptocurrencies could spark a global financial crisis unless tough regulations are introduced. Although regulators in many countries have started putting policies in place to manage the rapid growth of cryptocurrencies, Cunliffe said this must be pursued as a matter of urgency. The Deputy Bank of England Governor has called for strict regulations on Bitcoin and other cryptocurrencies. According to The Guardian, Cunliffe has played a central role in monitoring cryptocurrencies over recent years as an advisor to the G20's Financial Stability Board and the central bank's overarching advisory body, the Geneva-based Bank of International Settlements. Related reading: Bank of England seeks to strengthen cryptocurrency regulations. In a speech on Wednesday, October 13, Cunliffe compared the growth rate of the crypto market, from $16 billion 5 years ago to $2.3 trillion today, to the $1.2 trillion subprime mortgage market before the 2008 financial crash. He said there was a probability that financial markets could be rocked in a few years by an event of similar magnitude. When something in the financial system is growing very fast and growing in largely unregulated space, financial stability authorities have to sit up and take notice, he said. He also spoke about the majority of crypto assets having no intrinsic value and could be worthless overnight. He stated emphatically how the crypto world is beginning to connect to the traditional financial system even though the space is still largely unregulated. The banking chief added that there were financial stability risks currently are relatively limited, but they could grow very rapidly if, as I expect, this area continues to develop and expand at pace. How large those risks could grow will depend in no small part on the nature and on the speed of the response by regulatory and supervisory authorities. Related reading: Bank of England Governor still isn't a fan of Bitcoin. His comments are similar to those of Bank of England Governor Andrew Bailey. In May, Bailey called crypto dangerous and warned that investors should be prepared to lose all their money due to the digital asset's lack of intrinsic value. Bitcoin expert Max Kaiser responded to the Bank of England's deputy governor's recent warning about cryptocurrencies in a statement to express.co.uk. He said, "Bitcoin is designed to trigger a meltdown of the current fiat money banking system. This is a mathematically guaranteed outcome." Kaiser implies that the BOE is grieving because Bitcoin killed central banks. Bitcoin killed central banks. The Bank of England is in the second stage of the 5 stages of grief, the anger phase. He further pronounces that the Bank of England will eventually consider adopting Bitcoin. The bargaining phase will be their central bank digital currency stage, and when that fails comes depression as the price tops £363,000, $500,000. And then acceptance, with the Bank of England scrambling to buy Bitcoin before it tops £727,000, $1 million, per coin, Kaiser says. Hit the like button and subscribe to the channel.